Alright, video time. Let's get into it. Why is this guy always calling me when I'm about to do a video? Hey mate, how's it going? Yeah, I'm just about to film a video. Can I call you back? What's it about? Yeah, I'm about to tell people the foolproof method to multiply your money by 1,000 in a day. You don't think people want to hear that? Well, what do they want to hear? Yeah, look, I know this investing stuff can get complicated. It's not like there's any sort of cheat code or anything. Actually, you know, you're right. You're right for once. I guess there is kind of a cheat code. 13 Fs. Yeah, mate, forget this 1000x in a day stuff. Let's talk about 13 Fs. I'll put the video together, notification bells on, like the video, you'll see it, alright? Yeah, mate, I'll talk to you later on. Okay, see ya. Bye. Bye. Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. Hope you enjoyed that little intro. If you did, hit like, hit subscribe, and that way you can see future videos as well. So today we're going to talk about 13 Fs like you might have seen in that intro. And 13 Fs are about as close as you can get to a cheat code in investing. So there was actually a study done on Warren Buffett and his basically 13 F filings, which are essentially a filing that investors have to give to the SEC that becomes public information every quarter if they're managing more than $100 million in the stock market. So if they have more than 100 million, they have to tell you basically everything that they've bought and sold during that quarter. So it's a really handy tool that we can use to follow our favorite investors, see what they're buying, see what they're selling, and try and generate some really good ideas from that. So like I say, there was a study done on Warren Buffett and his 13 Fs, and it found that if you basically copied Warren Buffett's investments from 1976 to 2006, and even if you bought after the filings came out at the highest possible price for that quarter, you still would have compounded money at about 24% per year. So pretty crazy results. A 24% return is a big return to get in a single year. A 24% return over 30 years will make you very rich very fast. So they're very big numbers, and these 13 Fs are a great way of generating ideas. There's a couple of really good websites. You can either go directly to the SEC website, you can go on Whale Wisdom, Guru Focus, any of those websites will give you 13 Fs for these investors. Otherwise, you can literally just Google Warren Buffett 13 F or whoever you're kind of looking at. So I'm going to run you through my top 5 investors of 13 Fs that I check every quarter to generate some good ideas, and hopefully that'll help you guys out as well. The only word of warning I would say with 13 Fs, I've got a couple of sort of guidelines, I guess, that help me along. The first thing is I don't just copy everything that I see in a 13 F of a favorite investor, but it does give me ideas. So I don't necessarily just buy whatever Warren Buffett buys or Mohnish Pabrai buys or anything like that. But like I said, it's a good place to get ideas. So it gives me businesses to study, and if I can see exactly what they were seeing, if I can see that this is a really good business that's undervalued, then I'll go ahead and make the investment. But I'm not just going to kind of rashly copy everything. There's definitely companies that these guys own that I don't. The vast majority of them, in fact. So that's just a little word of warning. And the other thing I would say is look for how much of the portfolio each of these investments make up. So if you've got a favorite investor and you look at their 13F and they've got 50 or 60 stocks in there, it's probably not going to be of huge use to you. We're really looking for investments for big bets and infrequent bets, as Mohnish Pabrai would put it, and we're looking for investors that are doing the same. So people that have got, most of their portfolio, 50, 60, 70, 100% of their portfolio in the top 5 or 10 stocks in their portfolio. So that's the type of thing I'm looking for. If I find a value investor that's spread really thinly and has like a bunch of 2% investments, that's really not someone I'm going to probably copy and get some big high conviction ideas off. But if someone's got 50% of their portfolio on the top 2 or 3, that's going to give me a really good indication of what they are very confident on. So that's just a little word of warning, but let's get into my top 5 13Fs. Here we go. So number 1, this is going to come as no surprise, and that is the Berkshire Hathaway 13F. So Berkshire Hathaway, as you probably know already, is Warren Buffett's investment company, and they easily exceed the $100 million mark. So they manage, hundreds of billions of dollars at this point. So Warren Buffett's 13F is a very useful one. So when Warren Buffett makes investments, he makes big ones. You may see a few tweaks around the edges with some of the banks he owns and that sort of thing. But if you were following his 13F a couple of years ago, you could have picked up when he first started investing in Apple, for example. So you would have seen some big money start to flow towards Apple. You could have done the analysis and found that it was probably undervalued as well. And that's an investment you could have potentially copied at that price. There is just a couple of words of warning with Warren Buffett's 13F. So there are a few stocks in there that he's held for literally decades. So things like Coca-Cola and American Express, you'll see those in the 13F. Those are not new positions. So you'll want to focus on the things that he's buying and selling in recent quarters and in recent years. Those are the investments that are most likely to be undervalued. The other thing is you really want to focus on the ones that are getting the big money put towards them. So Berkshire Hathaway does have a couple of other money managers working under Warren Buffett. So they have Todd Combs and Ted Wexler, and they are each running, to my knowledge, around $10 billion each. I think it's somewhere in that ballpark. So if you see investments like Amazon, for example, that was actually not Warren Buffett. That was actually either Ted or Todd. We don't know exactly which one, but it's one of those two. And so that's something to watch out for in the Berkshire 13F. But that's the first one. So let's get into 13F number 2. 13F number 2 is the author of this book, The Dando Investor, and that is Mohnish Pabrai. So Mohnish Pabrai is probably my favorite investor other than Warren Buffett. You hear me talk about him on the channel a lot. I've made videos about him on the channel a lot as well. So Mohnish Pabrai runs a very, very concentrated value portfolio, and if you look at his 13F at the moment, I believe there's only 3 stocks in there. So I think you'll see probably Fiat Chrysler, Micron Technologies, and a company called GrafTech International, to my knowledge. So he runs a very concentrated portfolio in the US. One word of warning again with Pabrai is you've got to put this in context, and the context in this situation is that Pabrai runs a lot of money outside of the US. So he used to be very heavily invested in the US. As prices have gone up, he's found himself floating into other markets. So he's got a lot of money invested in India, and he even has money invested in places like South Korea and Japan, I think, as well, and possibly even Turkey. He's had a trip over to Turkey as well to look at companies there and meet with company management over there. So the portfolio percentage size that you'll see on those 3 US investments don't actually represent the percentage of the overall portfolio. That's just sort of the percent of the US. But regardless, great place to get ideas from Mohnish's 13F. He's had phenomenal returns over a long period of time. When he first started out, he was doing 70% per year in the late 90s, early 2000s. He had a bit of a rough ride through the global financial crisis in 2008, but he's still averaged north of 15, somewhere in the 15 to 20% per year range is my understanding. So Mohnish is number 2. Let's get into number 3. So 13F number 3 is the author of this book, and actually a very close friend of Mohnish Pabrai's, and that's Guy Spier. So this is the Education of a Value Investor by Guy Spier. And Guy Spier follows a very similar strategy to the Buffetts and the Mohnish Pabrais of the world. So he runs a relatively concentrated portfolio, not quite as concentrated as Mohnish, and he's not quite as sort of deep value as Mohnish. So Mohnish is looking for those really beaten down, low PE, potential, companies that at the current price could be a PE of 1 if earnings grew, a little bit. So he's looking for extremely undervalued situations. Guy Spier is a little bit more Buffett-like in the fact that he tends towards higher quality businesses. So you'll see companies in there like MasterCard, for example. He still owns Ferrari stock, is my understanding. But those are the types of businesses that you'll see in there. So Guy Spier has very, very low portfolio turnover. You won't see a lot of trading quarter to quarter, but he has certainly outperformed the market over a long period of time with his Aquamarine Fund is the name of that fund, and that's probably what you'll have to search for the 13F. But Guy Spier comes in at number 3. Again, a very useful one. If you do ever see new positions in there, they're definitely ones worth looking into. Outside of the MasterCards and Ferraris, he does have quite a strong background in financials and financial institutions, so you'll often see banks and that sort of thing in Guy Spier's 13F as well. So that's not really in my circle of competence or area of understanding, but if you do have some really good level of knowledge in that area, Guy Spier is probably a good one to check out. So guys, number 3, let's get into number 4. So 13F number 4, our second to last one, is Ruane Cunniff, and they are famous for managing the Sequoia Fund. So if you don't know what the Sequoia Fund is, if you have a copy of The Intelligent Investor, look in the back of this book. So in the back of the most recent edition, you'll see a lecture given by Warren Buffett called The Super Investors of Graham and Doddsville. And basically that lecture was intended to try and debunk modern portfolio theory and efficient market hypothesis, which basically says you can't beat the market. Everything is priced at its value at all times, and you can't actually buy undervalued stocks and outperform the market. So Buffett came in and gave the performance record in here of a whole bunch of different value investors that had been taught or somehow influenced by Ben Graham. So you'll see Warren himself in here, Charlie Munger, Walter Schloss, all these people, and one of the people in there is the Sequoia Fund. So this is a fund that's been running since 1970, and they still run a very concentrated value portfolio. So I was having a look at their latest 13F yesterday, and they have around 70% of the portfolio in their top 10 stocks. So still a very concentrated value-based portfolio, and that's exactly what we're after if you're in kind of my camp, my kind of value strategy, when you're looking for people to potentially clone and pick up ideas from. So that's our fourth one, Ruane Cunniff. I'll put the spelling of that on the screen if I haven't already. That's number 4. Now let's get into number 5, which if there is ever anything on this 13F, it's going to be very exciting. So I'll let you know what that final one is. Alright, so our fifth and final 13F is a guy by the name of Li Lu. And again, I'll put the spelling on the screen if I haven't already. So Li Lu was made famous for a couple of reasons. So the first reason is he has had an insane performance record. So I haven't got a recent update. We haven't got a recent one, unfortunately, on his figures, but he's rumored to have been cranking out 28% a year up until the last update that we've got. So insane returns. And he's also was also made pretty famous by the fact that he had about $80 million of Charlie Munger's money given to him to invest. So there's this video on YouTube, and I might even put it on the end of this, either on the end of this video or I'll link it down in the description, one of the two. Basically, Charlie Munger read Barron's, which is a financial magazine. If you don't know what Barron's is, I don't read it because I think it's just based in the US. I might be wrong there, but anyhow, basically Charlie Munger read Barron's for 50 years, for a very, very long period of time. And in each edition of Barron's, there would be a few stock tips, and these stock tips would come out every week for a long period of time. And if you do the maths over that 50-year period, it's literally thousands of stock tips that you get in Barron's. And after 50 years of reading it and 50 years of not taking a single stock tip, Charlie Munger found a no-brainer investment that gave very high returns, and as he put it, with virtually no risk. So from that investment, Charlie made about $80 million. He then went and gave that money to Li Lu, And Lee Lu, as of 2017, had turned it into $300 or $400 million. So from this one stock tip in Barron's, after reading that for 50 years, Charlie Munger is $300 or $400 million richer. So pretty crazy story. Phenomenal guy. There's a really good interview by, really good lecture from Lee Lu on margin of safety that he gave at an American business school. So that one's definitely worth checking out. And I still keep an eye on Lee Lu's 13F. Unfortunately, we haven't seen something on there for a little while, but if we ever do, he will definitely fall into this concentrated value camp. So definitely one to keep an eye on, even if it has been fairly dormant for these last few years. So those are my top 5 13Fs. If you've got any others that I've missed, definitely drop them down below. I'd be very interested to hear your thoughts there and keep building my own list of 13Fs to keep an eye on. But that's all from me today. If you enjoyed the video, hit like, hit subscribe. You can see other videos over there, and I know I got this the wrong way around in the last video. We'll try again here. I think you can watch other videos over there. Hit subscribe over there. If not, it'll be the other way around. So have a great day, and I'll talk to you next time. Cheers.